Gold gets a boost following the Bank of England's rate cut and ahead of Friday's big employment data. So what's the best way to play the gold market right now? Joining us is a veteran technical analyst, Gary Wagner. Gary, good to have you back on the show.
Great to be here. Thank you so very much.
So let's take a look at gold here, settling nearly 0.2% higher today as the BOE announced more stimulus and cut interest rates. So what are you making of today's move here, Gary?
Well, we're seeing some more upside momentum, of course, in gold. We had this recent move by the Bank of England. We also had Bank of Japan last week coming out with the stimulus package. So we're seeing a lot of central banks globally really flooding the money supply for their given country. And that, of course, I believe has to boost gold prices overall.
But tomorrow could be a game changer. We have jobs coming out. What type of reaction can we expect here?
Well, it should be pretty interesting. Of course, we've gotten some hint to it as ADP numbers came out. And so we're expecting a modest economic growth scenario. And the key to really look for, I believe, is not so much what the numbers are, it's how the numbers relate to the expectations that were put out today.
So, Gary, what's the best strategy for a gold investor to take here ahead of the non-farm payrolls? What do you do?
That can be very, very tricky. I prefer to actually be grounded in a position prior to the report coming out, meaning days before. But if you're looking to make a play immediately following the report, what you want to really hone in on is not so much the numbers, but the numbers as they compare to the expectations. In other words, if the expectations are way off, you can get those big spikes, those moves one way or the other. So that's what you really want to look at.
And Gary, last time we spoke, which was about 3 weeks back, you said gold investors shouldn't worry too much about any pullbacks. And you mentioned that the market is eyeing the 1450 level. Are you sticking to that?
Yeah, actually, we have updated our forecast model. Right now, it's around 1430, so not that much different. And as you know, when we spoke last time, we were looking at the market coming down. I believe I was looking for either 1330 or 1300 as an area to find support. Market did drop, and it dropped from 1371 and actually found support at 1315 and has moved up from there. The key area we really want to look at right now is that previous top, which is about $11 from here at 1371, and that's basis spot.
All right, switching gears here. Thoughts on the dollar, Gary? A lot of movement this week. It's back up ahead of the payrolls report. Where do you see the dollar headed?
Well, the dollar is going to be data dependent. And really what we've seen recently is the dollar has returned in terms of its favor as a safe haven currency when you compare it to the volatility we've seen, for example, in the Japanese yen, the euro dollar, or the British pound. So we could see some continued strength. But the one caveat to that continued strength is we've seen gold rise in the midst of US dollar rising. So it's almost like a salmon swimming upstream. So we've got safe havens in play.
Good thoughts, Gary. Thanks so much.
My pleasure as always.
And thank you for watching. We'll see you tomorrow on Kitco's Gold Report.